Hey, did any real estate sell in April of 2026? Well, let's find out. I'm Justin Miller with the Chung Miller Group. At the Chung Miller Group, we help people build wealth through real estate. We help people buy and sell homes. This is the May 2026 real estate market update, where we look at all of the data from the month of April to figure out what actually happened. And we make comparisons to the month prior and to the year prior so that we can see actual trends that may be in place. Okay, so before I start into the real estate data, let's just talk real quickly about background. What's going on in the macro environment? War, the Trump war against Iran continues throughout the entirety of April, creating very significant levels of uncertainty and causing gasoline prices to increase really quite significantly as well, not just gasoline, but diesel prices as well. So what that means is we're seeing significant inflationary factors moving into the environment as we go into the month of May of 2026. Those inflationary forces are, of course, pushing up interest rates, and we've seen interest rates fluctuating at a higher level, but increasing actually over the past 3 weeks. Such that 30-year fixed-rate mortgages are now averaging about 6.4% nationally across the country. Of course, individual banks may compete and look at different interest rates, and some sellers may be willing to buy down interest rates, and so that's particularly true with new construction. But existing home sellers can also buy down interest rates. So there are things that can be negotiated around that particular issue. Okay, so high levels of uncertainty creating higher levels of interest rates than we might otherwise expect, because we are also seeing higher levels of inflation. That's a background macro environment that we were confronting through the entire month of April of 2026, and obviously continuing into May. All right, with that background, let's go ahead and start looking into the numbers themselves. What took place in April of 2026 in the real estate market here in Las Vegas? So first thing we look at is always price. Single family resale. What's going on in April, where we have the complete data? What's going on in single family residential for price? We came down $5,000 to $465,000, right? So we dropped about 1.0% in the price of sold resale units in the Las Vegas Valley. Now, I want to point out that's not any kind of trend. We're fluctuating here, right? The month prior, we were up $5,000. This month, we came down $5,000. The month before that, we had been lower still. So what we're seeing is a little bit of fluctuation taking place near the top of the market. Remember, the highest we've ever been for resales in Las Vegas Valley is $480,000. So we're $15,000 below that. That number took place in 2022. We're not seeing any trend here. We're seeing fluctuation between about $460,000 and $475,000, $480,000. So we're fluctuating near the top of the price range that we've been in for the past 3.5 years, almost 4 years now. Okay, so we're down 2.1% year over year, because in April of 2025 we've been closer to the top of that range, right? But we're not moving down. We're staying horizontal. We're moving sideways in this near top of the range band. All right, what about condos? Condo prices a little bit different. We came up $4,000. Or 1.8% to $225,000 in April of 2026. So that's good news, but we are down 8.9% year over year on condo prices. Condo prices have been considerably more volatile over the past couple of years, and we're not near the top of that range. We're sitting a little bit lower, right? So condo prices have gotten ahead of themselves. They've come back down a little bit more significantly, but in April, we were up a substantial 1.8% or $4,000. Townhome prices flat, exactly flat in April relative to March, $330,000. We are down 5.2% year over year because, again, the townhome market is more volatile. Both condos and townhomes are smaller numbers of properties and therefore transactions. And so, because they're smaller numbers, we see greater levels of volatility in terms of the statistical analysis. Okay, but that's where we're pricing. So, down on single family, up on condos, and flat on townhomes in the month of April of 2026. Now, in some manner, this is actually good news because other portions of the market are unhealthy, and we're going to talk about that in just a second. But we were effectively sitting in a decent place close to the top of the market for prices across all submarkets in April. Let me also give you a pricing insight, and that is price per foot. Remember, price per foot is not a good way to price a home. It's not a good way to comp a home, but it does give us some information with regard to the macro environment, the macro housing environment, as to whether or not we are seeing more strength at the higher end or the lower end of the market. What we actually saw in April of 2026 is single family homes. We saw no change in price per foot vis-a-vis March. So that's interesting, right? Overall price came down, but price per foot flat. Okay, so the difference between them suggests there's actually not much difference in what's happening at the higher and lower ends of the market. And in condos and townhomes, we actually saw prices come down a little bit on a per foot basis, even though we saw prices on a median sold basis increase on condos and remain flat on townhomes. What that actually suggests is it's the lower end of the condo and townhome market that's performing a little bit better right now than the upper end of the condo and townhome market. And so just a little bit of insight as to the dynamics within the submarkets that we're looking at right now. Okay, so that's pricing. Again, pricing pretty good, actually, if in the aggregate. What about demand measures? And that's where we look at sold, the number of properties that actually sold, closed contract, changed hands during the month of April of 2026. Well, the numbers are much less good here. Single family resale, 1,941. That's down 138 from what we saw in March. Remember, this is the heart, April, the heart of the spring selling season. The two biggest growth months of the year are generally April and May. And then we've got, that sort of caps in June before we get into the slower summer season because of all the heat. So we should see real strength in demand in sales in April. We really should. Seasonally, that's what happens. Well, we're down 138 from what we saw in March. We're down 6.6% for number of closed single-family residential resales that took place in the Valley. We're also down 3.0% year over year. And that's kind of interesting because we're below the numbers that were put in place in 2024 and the numbers that were put in place in 2025 in the single-family residential submarket. Okay. Well, what about with condos? With condos, 221 closed transactions. That's down as well. It's down 12. Okay. Down 5.2%. It's also down 11.2% year over year. And it's weaker than what we saw in 2023, in 2024, or in 2025. Right? And I mention that because remember, 2023 had been the weakest year we'd seen in a generation. 2024 was slightly better. 2025 was even weaker than 2023. So last year, 2025, the weakest year we've seen in a generation here in the Las Vegas Valley. And on a per capita basis, meaning if we normalize it for number of people who actually live in Las Vegas, we're looking at numbers that compare to the mid-1970s. Okay, so very low transaction volume taking place here. And single family and condos, we came down month over month, and we've come down year over year, and we're looking at multi-year lows here. Now, townhomes, a little bit different story. 255 closed sales for townhomes in April of 2026. That's up 53, actually. That's up a strong 25.6%. Month over month. It's also up 6.7% year over year. So townhomes performed really well, relatively speaking, in April of 2026. Now, kind of interestingly, this is still a number below 2023 and below 2024. It's better than 2025. Two insights. The first insight is on that sort of comparison across years. 2026 total sales to date. So across the first 4 months of 2026 in the resale market in Las Vegas, our start of year has been weaker than 2023. It's been weaker than 2024. And in the aggregate, it's stronger by 2.0% than 2025, which had been the weakest, as I just noted, since the mid-1970s on a per capita basis. Okay, so we're looking at a continuation of very low transaction volume here in the Valley. And that's true across the country as well. Our statistics are a little bit different than the statistics that you'll get in any other market because real estate tends to be local. But the uncertainty issues, the interest rate issues, these are all being significant drivers for real estate everywhere across the country. And so we're seeing similar patterns, similar trends here in Las Vegas to what we're seeing across the country. Now, second insight with regard to demand or sold is pending contracts. Those are contracts that have been written but not yet closed. Those are up in all three submarkets, single family, condos, and townhomes. But they're up only in the sense of seasonal normality. They're not up relative to what we would expect seasonally. And they're starting from this very low base where we've got multi-year lows in terms of transactions. So growth, great, but growth off a very low base at only seasonally normal levels. So we should not be expecting to see that May is going to turn this around and give us a whole lot of transaction volume. That's just not what's going to be happening here. We're going to continue with low transactions at least through the month of May and likely going forward. Okay, so next issue. We've looked at prices, we've looked at demand. Now let's look at supply, right, which is measured as inventory. Well, the supply for single family resale residential units, 6,725. And just to clarify, that means the number of actual properties that are listed in the MLS as available for sale. Right, 6,725. That's down. It's down 131 from March of 2026. It's down 2.0%. And on a year-by-year basis, so looking at April of 2025, we're down 5.1%. Now, I'm going to comment more about that last issue in just a minute, but let's look at condos and let's look at townhomes. Condos, 1,554, that's down 75 from March through April. That's down 4.6% month over month, and we're down 7.7% year over year. Townhomes, 1,096, that's down 65 or 6.2% month over month. We're up in total townhome inventory of 3.1% year over year. So very minor change for townhome inventory, but it's up, right? Where single family residential and condos are down. Now, I want to point out that for each of the past 11 months prior to this, we had been seeing inventory numbers come down on a sequential basis year over year. So we had been up in some month, let's say 10%, year over year, and then we were up 9% year over year, and then 8% year over year, meaning inventory excess, and I use that word very advisedly, from 2024 and 2025 had been depleting month by month as we've been working through the past 11 months until we got to April. And now here we are looking at the April data, and not only are we depleting the excess inventory, but we actually have gone negative on inventory relative to the year prior. And this is the first time we've seen negative inventory growth, right? Actual shrinkage of inventory in a year. And that happened for single family homes down 5.1%, and for condos down 7.7%. And for townhomes, we're up 3.1% over last year. But we had been looking at growth of over 50% in terms of overall inventory in the townhome space relative to the year prior, right? Because townhome inventory had been really, really constrained in the year prior, and we've worked that out, right? So working it out in this particular instance is kind of negative, right? This is where we start to see the market's actually really unhealthy. What was April? Well, April is the core of the spring selling season. The two strongest months of inventory build every year are going to be March and April. And then we start to see a leveling in May and June, right, where sales tend to be the very strongest in April and May, and we get that leveling in June. Well, this year, inventory growth through the core of the spring season, we're seeing inventory depletion, not growth. Okay, now all segments showed significantly and sequentially lower year-over-year growth. That's after an 11-month trend where we've been actually going down, right? So the trend continues, but now we actually are saying it's not growth any longer, it's actually shrinkage. Another critical insight, new listings. Now, new listings, that's a potential seller decides, you know what, it's time, I'm going to list my property, I'm going to place it into inventory, which is great. That's where we got most of our new inventory from. So that did grow. It grew weekly for single family and for condos. It actually fell for townhomes. So that's interesting, right? So April should, again, be the strongest month of the year for new listings, just like for inventory growth, because new listings contribute to inventory growth. What we're seeing is weak growth in new listings for single family and for condos, and we actually saw shrinkage in townhomes, which suggests that townhome inventory, when we're looking at the May data next month, may actually show slippage overall from where we had been in 2025. Okay, so that's listed inventory. Now, some months I also look at inventory from another perspective, and I'm going to do that here, right? We're through the fourth month of 2026. So we've been looking at this every few months to see how we can divide inventory to get a better understanding of what's going on in the marketplace. And I'm dividing it as real inventory and fake inventory. Real inventory is priced for the market. Fake inventory is stuff that's priced in a manner that buyers will not discover it, buyer agents will not discover it, and so it just sits out there in the MLS saying it's listed, it's inventory, but it's not discoverable, right, in any real transaction valid manner. It's discoverable from people who look at the macro data within the context and say, oh, there's this many houses listed for sale. But if you were actually talking to a real estate agent and said, I want a house that looks like this, in this neighborhood, that's this size house, that has these attributes, and I want to be in this price range. And the price range is informed by what's actually selling in the marketplace. You'll never find the fake inventory because it's got pricing, which is just ridiculous within the context of the way in which the market is actually clearing. So what I do is I look at all of the listed inventory. I look at every single property that's listed in inventory. And I compare that to what's actually selling, right? So this is a lot of work. It's a lot of statistical work, but it's really interesting to see what's actually taking place. And so I give this information to you. Now, the median list price in the multiple listing service in the MLS at the end of April of 2026 was not 465,000. It was $580,588. That's really high, right? That's $115,588 higher than the median sold price. So if I was going to offer you, I don't know, something at $100,000 more than it's worth, you would laugh at me. Well, that's what's going on with the inventory that's sitting in the market. The median list price, almost $116,000 too high relative to the market value according to what's actually selling. It's a pretty stunning number, right? This is actually just about the biggest gap that we've seen between list price and sold price in the period of time that I've been doing these analyses to figure out what's real and what's fake as inventory. Almost $116,000. And by the way, if you're priced at $580,000, you've got a median home, right? Because that's a median list price. And you cut your price by 10%, by $58,000, right? You're still $532,000. You're still way above 465. You got to cut your price another 10%, right? And then you're still going to be a bit too high, right? These are prices that are just totally ridiculous. Now, not everything sitting in inventory is ridiculously priced. There's stuff sitting out there that's priced appropriately, right? And so as I parse through all the inventory, I look at what's actually priced appropriately. So here's the thing. If we normalize the inventory to reflect sold price, and we said that 465 is the appropriate median list price. Now, maybe it should be 466. Maybe it should be 470. Maybe it should be 463, right? One can quibble around the edges of the analysis, but the analysis is really strong because these numbers are so disparate, right? So here's what we find. Real inventory is only 3,092. It's not the 6,725 houses that appear to be sitting in inventory. The real inventory is actually 3,092. What that means is less than half of the listed inventory is real. It's about 48% of listed inventory is real, and 52%, more than half, is fake inventory. Well, let me give that to you in a slightly different perspective. 3,092. That's less than 30% of normal inventory for this time of year, right? So anyone who looks at the overall global inventory number and says, oh, inventory is like 6,700 and, it's a little low, but it's not bad, right? A, it's shrinking. And B, it's half fake, and real inventory is less than a third, less than 30% of what it should be for this time of year. 3,092, that's it, right? Across the entire valley for 2.5 million people to look at when they're looking to buy a house, right? And when you start segregating that to, well, I want to have 3 bedrooms and I want to have 3 bathrooms and I want to have a pool and I want to be in this zip code and I want it to be a house that's, maybe built 2020 or newer, right? You're looking at really, really small numbers. And hence, we get small numbers of actual sales, right? Because inventory is low and that causes buyers not to have access to all the things that they'd like to look at to be able to buy. So part of the reason we have what appears to be low demand is because we have really low supply. Okay, that's why a couple months ago I described this market that we're in right now is unhealthy. During the peak of the spring selling season, we see sales coming down. During the peak of the spring listing season, we see inventory coming down. And the inventory itself, half of it's fake. So we're sitting in this unhealthy market here in Las Vegas right now. Now, it doesn't mean that the market's going to crash. It doesn't mean the market's going to explode. It doesn't mean anything like that whatsoever. But it does mean we've got really significant constraints around us in the marketplace right now, right? There's the macro issues of inflation, of uncertainty, of high interest rates. But there's the market conditions themselves, which are influenced undoubtedly by those larger macro issues. The market conditions themselves have become unhealthy. That doesn't mean you can't get an appropriate deal. It doesn't mean that you shouldn't be thinking about investing into the future, whether that's buying a house for yourself or buying a house as a rental property, or selling a house so that you can move on and do something other. But it means that the market is really slow. The market has a lot of constraints around it that are causing transactions to become more complex, more tedious, take longer periods of time. So it's something you need to recognize if you're thinking about being involved in this market. And again, being involved in this market is not a bad thing, right? You can make really good investments in a challenging marketplace that can pay out for you really well over periods of time. You can exit from really challenging markets, but there's transaction costs that are involved that may actually be a bit higher because of everything that's taking place right now. But if you've got inventory and the inventory is listed completely appropriately for price and you're showing your house really well, there's not much competition for you. So something to keep in mind. But real inventory is falling. It's low and it's falling through April of 2026, right? To less than 30% of what it should be. Okay, so let's look at the one other statistic that I look at every month. And I've been looking at it since October of 2020. And this also goes to health of the market. And this has been the statistic that's been flashing unhealthy signals continuously since 2020. And that is back on market, which is the measure for contract failures, right? And it's a slight undercount. We don't know how big the undercount is, but contract back on market means a contract that failed and came back into the market. So it does not capture contracts that fail that do not come back into the market, a relatively small number. But this tells us something about, how probable is it that you get a buyer or you get a seller to agree to sell to you and you're actually going to be able to make it through the transaction. Single family resale contract failures back on market, 672. That's 25.7% of single family contracts failed and came back into the market, right? There's some number a little bit higher that failed. This is the number that comes back into the market after failure, okay? 25.7%. Condos, 103 back on market, 31.8% of contracts failed, came back into the market. 102 townhome contracts failed, 28.6% failed, came back into the market. Failure rates that are really, really high, right? And have been now for virtually 6 years, right? This contract failure rate, which Redfin now occasionally publishes something about, but comes up with much smaller numbers because I don't know what they're analyzing, but starting to highlight that, hey, this is a problem. Bigger problem than what Redfin is pointing out because they're using data that's not working properly, really elevated, goes to the health of the market. the real estate market, and this, by the way, this isn't a Las Vegas specific thing. These numbers are Las Vegas specific, but these are issues taking place across the whole country where the macro environment is impinging on every real estate market across the country. And all of the real estate markets across the country are experiencing these unhealthy signals. Okay, so that's the April 2026 data. That's the May 2026 real estate market update. I'm Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. We help people buy and sell real estate. Okay, so these are the data. This is what's going on in the market. Please subscribe, like the video, click the notification bell. More importantly, share this information with the people that you know who may benefit from it. People who are thinking about engaging in a real estate transaction, people who want to engage in a real estate transaction, people who maybe would like to but are fearful of engaging in a real estate transaction, because we can help them. And having this kind of high quality information can be very helpful. It can be a little bit scary, right? You're learning the market's actually not helpful, but finding what the data are and then being able to work with somebody who knows what the data are and knows how to work through that data can be really helpful. I'll see you in the next video. Thanks.